So let's talk about Novo Nordisk, one of the biggest pharmaceutical companies on the planet. Well, they just had an absolutely terrible day on the stock market. We're talking about a crash that erased billions of dollars in value, and it seemed to come out of nowhere. So just how bad was it? The stock plunged almost 18% in one single day. To give you some perspective, that drop was so huge, it completely wiped out every single gain the company had made for the entire year. Poof, gone. So the big question on everyone's mind is, what on earth just happened? Well, in this explainer, we're going to get to the bottom of it. We're going to break down exactly what triggered this massive sell-off, what it really means for the company, and honestly, why it matters to way more people than just the folks on Wall Street. Okay, so the immediate cause, the thing that really lit the fuse here, was a surprise announcement. Novo Nordisk put out an early forecast for the year 2026. And, to say the market was disappointed, that would be a massive understatement. And just look at these numbers. This is what sent investors running. The company told everyone to expect both sales and operating profit to fall. Not just slow down, but actually go backwards by anywhere from 5 to 13%. For a giant company like this, that kind of forecast is just shocking. The CEO, Mike Dusadar, he didn't try to sugarcoat it. He basically came right out and told investors, hey, buckle up, things are going to get worse before they get better. And he pointed his finger directly at some major headwinds in the US market. And that right there, that's the real story. This terrible forecast isn't just happening in a vacuum. It's the result of some really intense pressure that's been building up in the company's single most important market, the United States. So let's unpack what that pressure actually looks like. So it's really like a perfect storm, hitting them from three different directions. First, you've got brutal competition from rivals like Eli Lilly. Second, cheaper, almost generic-like versions of their biggest drugs are starting to pop up. And third, and this is the really interesting part, the company is choosing to cut prices on its own key products. And this is a perfect example of that strategy in action. Let's take their blockbuster weight loss drug, Wegovy. The original injectable versions, super expensive. But this new oral pill they've released, they're pricing it at just $149. That is a massive price cut. It's designed to get the drug to more people, sure, but it also means a huge immediate hit to their bottom line. Now, the company has a name for this game plan. They're hoping for what's called a U-shaped recovery. The idea is pretty simple. You take a big, painful hit right now, that's the downward slope of the U, with the hope that it helps you build a much stronger business that will eventually rise again better than before. It's a huge gamble. But to really get why investors panicked so much, you have to remember this isn't their first rodeo. You just have to rewind clock 1 year to 2025, which was an incredibly rough ride for anyone holding the stock. I mean, just look at this timeline. Halfway through 2025, they cut their outlook because of problems in the US, and boom, the stock dropped over 20% in one day. Sound familiar? Through the whole year, the stock lost almost half of its value. It got so bad, they had a huge leadership shakeup, bringing in a new CEO and even bringing back a former one to help right the ship. Okay, so this is obviously a massive deal for Novo Nordisk and its shareholders, but the ripple effects from the story go so much further. This is not just about a stock price. It's really a story about the future of our healthcare. Just think about it for a second. The pricing decisions that this one company makes directly affect whether millions of patients can get their hands on vital drugs for things like diabetes and weight loss. Their strategy impacts entire national healthcare budgets. And it throws a spotlight on that constant tug of war in the industry between affordability and profit. What they do here could set the tone for every other drug company out there. Which brings us to the big question at the heart of all this. Is Novo Nordisk any full-blown crisis? Or is this just a really painful but necessary course correction on the way to something better? You can really look at this in two completely different ways. First, there's the view from inside the company. The CEO admits things are tough, but he's framing it as a positive, like a trial by fire. He's saying these challenges have actually made them stronger and that their eyes are still on the prize, the huge long-term opportunity. But then you have the view from Wall Street. Analysts, like the ones at Barclays, are way more skeptical. They're basically saying, hey, we've seen this movie before. Investors were optimistic last year, too, hoping the company was just being overly cautious. And as they remind us, that optimism didn't exactly pan out. It's a classic case of fool me once, shame on you. And that leaves us right here with this final, really important question. Is this kind of brutal, short-term financial pain just the price of admission for making long-term progress? Is this what it takes to make life-saving medicine more affordable and accessible for everybody? There's no easy answer, but it's a question that's going to shape the future of medicine for all of us.